Oh boy, what a day. Well, another great day comes to an end. It's time to get back to work tonight, though. Time to get ready for tomorrow. It's Wednesday evening. It is already March the 31st. My name is Joseph, and as always, welcome back to your nightly newsletter. Now, if you're tuning in for the first time tonight, it is great to have you with me because my job tonight is really important. My job tonight is to help us find the best trade setups and capitalize on Thursday's trading session. I got a jam-packed video in store for you guys tonight. Charts are all prepped up in the background, as you can see. We got the Emini. We'll get the Nasdaq and get the gold on our radar for tomorrow. Boy, where do I begin? Big moves on the charts today. Big news on the schedule for tomorrow. Got a holiday weekend coming up right around the corner. But here's the question. Let's cut to the chase. Here's the question. Did we go too far? Did we push this too far? I know we talked about the reversal in last night's newsletter, but did we go a little bit too far here? The S&P sure looks like it might have. I don't know the Nasdaq, though. Nasdaq seems like it's got some more legs on it. And the gold, I don't know, that gold looks like it might have taken itself a little bit too fast, too far here. What do you think? You know, we're definitely bullish out there right now, but did this thing go? Did we overdo it? Did we binge on the buy side today? It smells like that. And of course, tonight on this video, I'm going to talk about why I think that. First of all, why I think we've maybe gone too far. And at the same time, we'll talk about how to capitalize on some reversals, on possible ranges, and what if we get more legs going higher? I can definitely see some opportunities for another leg higher tomorrow. I'll break it down, all the details tonight on this video. Before we jump in, though, and get our hands dirty on these charts tonight, I just want to make sure to remind you, if you've done so already, make sure you subscribe to our YouTube channel. We publish this video newsletter every evening with our best trade ideas for the following day, so don't miss our next video newsletter. Make sure you subscribe to our YouTube channel, hit that little bell icon so you always get notified every time I publish something new. And don't forget, if you have any questions, drop those questions for me. Don't be afraid to ask questions. I would love to answer all your questions. Drop those questions in the comment section below. And you know, guys, I appreciate you tuning in every evening. If you enjoy the video as much as I enjoy making it, do me a big solid tonight here. Hit that like button for me. Hit that thumbs up button for me here on this video if you enjoy the content. But again, make sure you subscribe, drop those questions, and thumbs up if you guys enjoy it tonight here. But enough of the introduction. Let's get these charts going here. Thursday, the last day of the week, right? Last day of the week is tomorrow. It's right around the corner here. So the question is, did we overdo it, right? Did we go a little too high? You know, the buyers, of course, had full control of the market today. S&P makes new all-time highs. Nasdaq didn't make new all-time highs, but definitely took out some of those major highs we talked about in last night's newsletter. And the gold, right? 4 legs up with that big blast higher. Now, as I mentioned before, the S&P smells like there might be, well, the S&P looks like the money is on the short side right now. You know, we're at all-time highs. Got a bull flag in the chart right now. The risk reward, the better payoff is the short side right now on the S&P. The bears don't have control over it. So we'll talk about the best way to get short on the S&P tonight, as well as how to buy this market tomorrow. It's not going to be very easy to buy this S&P tomorrow. I'm going to break it down into small pieces for you so you're ready to capitalize on the E-mini. The Nasdaq, though, is the one that definitely looks like we could get some more legs going higher here. Nasdaq, honestly, is more like a wait-and-see environment right now. I would love to short the Nasdaq, but I could definitely see some potential here for the buy side here tomorrow as well. I'll talk about why I think the Nasdaq is the most potential to keep going higher here. And then, of course, over on the gold, right? Gold is one of those classic situations where it's almost a straight line up today, right? Almost a straight line up on gold. Whenever I see these situations, usually the following day is a range or a reversal. Now, we'll talk about how to capitalize on the range and the reversal in this video tonight. There's also a ton of open space overhead on gold, so I would not hate it if we saw one more leg higher. But I think the easier money there is on the range or the reversal on the gold. So, boy, lot to cover here tonight. Flag on the S&P, range on the Nasdaq, 4 legs up on the gold. Before we jump in, though, and put this plan together, let's make sure we don't forget what's happening tomorrow, right? Now, tomorrow is not your average Thursday. And first of all, there'll be no April foolery going on tomorrow on the newsletter, in the trade room, all right? So just keep it together tomorrow, April 1st. I am kidding with you, obviously. Hope you have a fantastic April Fool's Day tomorrow, pulling pranks on whoever your favorite victims are out there. Hopefully it's not me tomorrow. All kidding aside, though, don't forget, tomorrow is the end of the week. And I know it's only a Thursday, and I know we almost never have the markets closed on Friday, but Friday is known as Good Friday. It's the Friday before Easter on Sunday. So markets are closed tomorrow. If you don't believe me, go right to the CME holiday calendar. Check out the schedule for tomorrow. Everything is closed up tomorrow, and you can see here that the CFMA is recommended really closed. They'll be closed tomorrow. So markets are closed, not tomorrow, on Friday, right? So tomorrow is a very urgent day in the markets. If you're trading tomorrow, you've got to get your work done before the end of the day tomorrow, which is a big deal because, we're only individual traders. Most of us are just proprietary traders. We trade our own capital. But if you're working for a big trading firm and you had to get stuff done this week, right? Tomorrow is the end of the road. So there creates a sense of urgency, which hopefully will give us some great volatility as we go into Thursday's trading session. The big news for tomorrow, besides April Fools, is that PMI and ISM manufacturing cluster right there at 9:45 and 10 o'clock Eastern time. If you could only be at your desk for an hour tomorrow, 9:45 to 10:45 would definitely be when I would make sure you were glued to your trading screens tomorrow. So PMI manufacturing, the big news is that 10 o'clock ISM manufacturing index, right? We've got some PMI, some inflation numbers. We get some ISM numbers. So lots of inflation, lots of dollar stuff tomorrow, right around 9:45, 10 o'clock. That, if I had to guess right now, I would imagine that's where the best setups will likely come, in that 9:45 to 10:45 block. So don't forget, tomorrow morning, we'll be getting together tomorrow in our trade room, 8 o'clock Eastern time. We'll have a front row seat there for that 9:45 news there. And again, markets are closed on Friday, right? For that Good Friday holiday. That means, again, tomorrow, the pressure is on traders to make their money for the week before the closing bell tomorrow. Now, because there's no markets on Friday, because there's no trading on Friday, there will be no newsletter tomorrow night. So I do apologize for leaving you guys hanging there. It's not very often we take a Thursday night off, but I'm sure I'll find something to do with all my free time over here in the office. Again, don't forget though, 8 o'clock Eastern time tomorrow morning, we'll have a front row seat there for that ISM and PMI cluster at 9:45 and 10 o'clock Eastern time. We'll come back next week. If I don't see you guys tomorrow morning in the trade room, have a great Easter weekend. Stay safe out there, and make sure you come back and see us. Got a big month of April ahead of us for next week. But let's not waste any more valuable time. We can talk about April next week. Let's finish up the month of March here and get us ready for April the 1st. S&P's ready. Nasdaq is ready. Gold is ready. Glad to see you are ready here as well. Let's jump right in here, first of all, to the S&P. Now, first of all, let's make sure we see where we are right now on this E-mini. If I zoom all the way out, remember, we were sitting in this nasty trading range over the last couple days. We got some great clues we talked about in last night's newsletter that kind of tipped our hats of this rally going higher. They take out those all-time highs, and now we begin to kind of fade off of those highs, right? We take out those all-time highs, and we fade off those highs. It's a relatively straightforward kind of situation right now. The buyers, right? What would the buyers like to do? The buyers would love to go back up and retest that high here. And if you think about it, right, we're probably about halfway back, right, off of that big move. We're about halfway back, 50% back there off that big move. So I would expect buyers, this is probably where a lot of buyers will be trying to come in here and take this higher. They're going to want to go back and retest that high. And if they can break through that high, we keep talking about that 4,000 big round number there, right, for those buyers, right? Sellers have a very easy objective. They want to go back into that range where we began this week. If it really hits the fan tomorrow, they've got that bigger range down around 39.20. That's last Friday's range, right? That's last Friday's range. 39.20 area. So the buyers want to retest the highs. The sellers want to get back down to back down into that trading range. Now, you'll notice we've got some lower lows and lower highs on the chart. Now, this is when, this is a really good example of, well, most people would probably call this a bull flag, right? It's a strong move up into a very, consolidated, tight, sluggish channel. This looks like a bull flag, right? So how do you know the difference between a bull flag and a reversal? What's a reversal do? A reversal goes 1, 2, go. Right? If this was a reversal, we would probably already be back into that range by now. So I want to make sure I'm very clear on this. The bulls do have that slight edge right now. But with this prior all-time high and that kind of overshoot and hold, right? It's kind of like the opposite of what happened on gold yesterday, how gold went through its measured move and then popped back up today. So we have this kind of, it's almost like a drop ceiling. You know what I mean? You got the actual top and you got kind of that, styrofoam top, right? It's kind of like a drop ceiling there where the buyers are going to have a hard time here unless, of course, they can get some momentum going here, right? The buyers are going to have a hard time here really breaking free of this area here. So, if I was to describe the situation to somebody, I would say it's a strong bull market. We're getting a very deep pullback right now, about halfway pullback right now. The bears do not have control of this market, but it's starting to look like the easier money here is going to be on the sell side, right? The easier money. It's very difficult right now with these trend lines coming down overhead. It's very difficult right now to find a way to safely get in to the long side here. And we saw how that works last night, right? When we have trouble getting long, usually the short side, right, is the better option. If I had it my way tomorrow, right? If I got exactly what I want, I would love to use, you'll notice I got this little channel coming down here. I've marked up these swings, right? I've also marked up that low, and I like how it fits off that high. If I had it my way tomorrow, I would get that short off the top of that channel. Or if the buyers are successful in retesting those highs, I'll look for one of those nested reversals, 1, 2, and back down from there. The easier money is going to be on the short side right now. We talked about this last night. It was the opposite last night, right? Last night, the easier money was on the buy side. Tonight, the easier money is definitely on the sell side because of where we are. So if I want to get short on this, it's a relatively simple idea here. If the market pops right above the highs here, doesn't go all the way back up to retest these highs, but pops up into this new channel I've drawn in here, all I have to do at this point is wait for those buyers to try to buy that pullback and just get short into those stops. In fact, we might get lucky and get one of those failure into pullback combinations, right? In other words, we pop up, the buyers that buy the pullback, their stops are sitting right below those lows. We can short into stops, and then also we can short that pullback as the market rolls over here. The next plan would be if the buyers are successful, right? The buyers are, let's say we do get a strong run higher here, right? They retest the high. That would be perfectly anticipated, right? That'd be expected. It's a bull market right now. It's not a bear market. This is a bull market. All three of these markets are bull markets right now. Again, until we can get that jump, right? Those 1, 2, 3 reversals, that's when this becomes a bear market. So it would not surprise me to get this strong run higher here back up to retest those highs. Now, if we can get back up and retest those highs now, this definitely puts a stamp of approval on the buy side. So now, I do think the easier trade is the short side, but I have to be more patient now. Now I have to give those buyers more of the benefit of the doubt. Let them try once, let them try twice. And what I'll do is I'll draw that trend line off the high. There are two ways to short what I call a nested failure pattern. One is selling off that trend line. Two is selling into those stop losses as the market drops, right? All I'm doing here is I'm trying to really let the buyers kind of dig their own grave and then just simply push them into it, right? Selling into those stop losses. Now, What happens a lot of times is this thing will collapse, right? It'll really collapse as it goes. The next follow-up trade is you mark up that low, you mark up that high, right? And you short that next pop, all right? These are really, really. Now, when it comes to getting short on that next pop, all right, off the high of that channel, what I'll do is I'll use entry triggers like failure patterns and bull traps, right, off the high of that channel. Now, I'm not going to go into all the specific entry triggers in this video because I'd be here all night, but if you want to get a deeper dive into all the specific techniques to trigger the entry off the high of that channel, I cover all of that in our free trading course. I'll put a little button pop up there for you. Grab that free course and I'll go over my 4 favorite entry triggers and how I use them in situations like this, right? Where we go up, we see buyers try once, buyers try twice, right? I've got that nested, I call these nested failures, right? Buyers are simply buying into that overhead resistance. I can sell into those stops. And then again, I can draw that channel and bring it over from there, right? So those are some options here I'm watching for as we go. Again, it's a nested failure, right, into a pullback combination, and I'll go over more of the specific details of what the actual triggers look like in that free course link I just popped up there in the upper right hand corner. Now, another scenario here would be if this market keeps on going lower, right? If it keeps running lower, if it runs lower and it grinds lower, right? If we grind, same thing same thing stays. I mark up that low. What I would do in this situation is mark up that low now, mark up that high, find some of these swings, and look for that pop. Look for those buyers, again, try to buy the pullback and sell right into those stops with a failure into pullback combination. Right, and again, I'll go over more details of those specific entry techniques in that video course, right? I mentioned in the upper right-hand corner. What will be more difficult is if the market just runs, right? If the bottom falls out of it. Remember, there's a big move up right here. So if they can crack below this low, this could collapse back down in. If it does collapse back down in, look for traps. Look for traps. Strong move down, shallow pullback, lower low, and trap high, right? So if it really starts to escalate if it really starts to, speed up as it goes down like that, that's when wait for that trap high, and that trap will be your favorite setup before we get back down into that trading range. And don't forget extra bonus points if you can line up those lows with those highs and grab it off the top of that channel. Not required, but definitely a confidence booster if we can get that trap off the high of one of those channels. And then keep in mind too, if we were to end up back inside of this trading range tomorrow and we start going sideways, what do we do in that situation? We find levels of resistance overhead. We wait for the pop above the range. We wait for the test of resistance. Wait for the buyers to buy the pullback. And we sell right into those stop losses, right? Use those failure patterns to sell above the range. So again, if we just collapse back down, it's going to be traps, right? Traps on the way down. It really starts to, accelerate as we go lower. Find that channel. Right? Channel's not necessary, not fully required, but definitely a bonus if we do end up back inside of this range. Because again, this is the range we basically began the week with, right? That range down there. If we do end up back inside that range here, now just simply wait for it to go sideways, find levels of resistance above, right? Which in this case, I would mark up that low, mark up that high, right? Those would be some easy levels of resistance. You want to wait for the price to pop up, get up into resistance, let those buyers try to foolishly get long. We know where the stops are, and we can sell right into those stop losses, right? Those are called failure patterns. They're very easy. There's a lot of different variations of those failure patterns, and I cover the different variations in more detail in that free trading class that I popped up there in the upper right-hand corner. So now we know some ways to trade this if we do get that drop that I'm hoping for here tomorrow. Now here's the big question, right? how do we buy this market right now? The only way we can really buy this market right now, because you've got this kind of previous all-time high, this new all-time high, you've got trend lines coming down overhead, it's going to be very difficult for me to buy here. So what we need is we need one of those kind of pop and pullbacks, right? We need one of these strong runs up, pull back, and retest that high. That's what we're going to need to get. We're going to have to get one of these, where they jump up, they hold the pullback, and they go for one more leg going higher, right? We're going to have to see proof here from those buyers. What I can't do, though, is buy that first pullback, right? Because you're going to probably see it happen like this, right? It'll go up, they'll take out those highs, buyers try once, buyers try twice, and back down again. We don't want to get caught buying into those highs here. So in order for me to be a buyer right now, we know where these buyers would love to get to. If I can get that strong run up, if I can get those buyers to hold the pullback and jump off the moving average, right? We call those what? We call those 1, 2, 3 breakouts. Then we know where this market wants to go. I can mark up that high, I can mark up that low, and I can, of course, buy the first pullback off the low of that channel. We call these 1, 2, 3 breakouts. It shows me proof the buyers want more. I just don't dare buy right into that prior all-time high. It's just it's the easier money in this is on the sell side. Now remember, we're not just blindly buying the low of that channel. We're looking for seller failures. We're looking for bear traps into pullback combinations. And again, I covered that detail, right? Those detailed entry triggers in the video course linked up in the upper right-hand corner. All right, let's see what we get here tomorrow on the S&P. Tomorrow should be a pretty darn good day here in our trade room. Next up here, let's grab some Nasdaq. Now, Nasdaq is the one that I think has, as I mentioned earlier, the one that has the most potential here to run higher. And the biggest reason is because the Nasdaq is very, very far off any real major highs right now. We have this kind of sub high right now, but there's definitely some more space up here before we're into that 300. Not the all-time highs, right? The all-time highs are still way, way, way up top there, but those are going to be some major objectives there, right, for those bulls. So the Nasdaq definitely has a little more room to run here than the S&P. The biggest reason why I think the Nasdaq has some more space to go here is the way the day finished. Right, you'll notice what happened, right? We ran up and we pretty much finished the session here inside of a trading range. Now, we'll talk about this on the gold, but whenever I see a straight run up like this, usually the following day, or usually that's going to go sideways inside of a trading range. So it does look like the range is starting to come into play here as we speak. Let's get rid of this channel because the channel is really just there to show you where I've been looking for a channel on this. The range is the most important factor that I can see right now. This is going to be a little bit of a wait and see environment here on the Nasdaq. I really have a hard time buying it at this price level, but I wouldn't mind buying it if it grinds lower here for us. So here's some food for thought here as the market pulls back. I wouldn't mind being a buyer on it, but I have to be very careful on this for the same reasons why I talked about on the S&P. What I would love to get, if I had it my way tomorrow, right, if they gave me what I would want tomorrow, I would get a 1, 2, 3 move lower. Once we get that momentum moving, I would mark up that low over here, mark up that high over here, and look for that short off that high, right? A lot like we talked about on the S&P, all right? However, if all we get is the market grinding lower, right? If it grinds lower now that range acts as a magnet. If it grinds lower now what I can do is I can use a failure pattern to buy it back up into that trading range. Okay, so real quickly here, one more time, if this thing, again, on the S&P grinds lower, right? Grinds lower. But again, S&P's at all-time highs right now. It's very difficult to justify buying that area. Nasdaq doesn't have that problem. If the Nasdaq grinds lower, right? Grinds lower here, there'll be that trend line, I would love to see us now pop up. Bears try once, bears try twice, draw that trend line, find those stops, and go right back up into that trading range. Okay, now this is going to be all about personality at this point, right? Do we grind lower, Okay, do we grind lower? And I'll show you the difference here in a second. Okay, so if it grinds lower, we get down to our buy zone here. Again, everybody's going to want to short this thing. Everyone's going to want to short this back down in that trading range. If we don't get some separation away from the moving average, though, the bulls will still maintain control. Bears try once, bears try twice. I'm buying off that trend line support. I'm buying into those stop losses for a retest of that high using that trading range, right, as a magnet. Now, watch closely here. If we start grinding lower and then we start to separate, right, we start to see some strength going lower. That's the clue, right? That's the clue. Now, I could draw that channel off the lows like this and pop at the highs like that, but that requires a very shallow pullback. What you have to think about is as this thing pulls back, you're going to probably see buyers try kind of a Hail Mary, right? Halfway pullback. They'll try to run this thing back up as we go. So if we do get that separation off the high here, now what I'll do is I'll look for that wider channel, mark up that wider channel, right? And now that gives me a spot here now to look for that short. And what will probably end up being is it'll be the same thing we saw in the S&P, right? We'll get up, the buyers will try to buy the pullback, and we can literally sell into stops, sell the pullback combination, right? And take this puppy back down into that trading range below, right? Bears would love to get back down into that prior range where the week began this week. So again, if we grind, right? If we grind, bears try once, bears try twice, back up to retest the high. If we get some separation away from that moving average, right? We start getting that jump off the moving average. Now we don't short it. We wait for that pop, right? Anticipate that buyers are going to say, oh, halfway pullback, buy it. Once they buy it back up, that's your shot now to sell it right into those stop losses. Get that moving average coming down. Excuse me there. Draw that channel, get that pop, right? Get us up above the moving average. Buyers get caught on the wrong side of the market. Failure into pullback combination. So hopefully I made that clear here. It's always a bit difficult, right? Because you got to wait and see. The key is going to be, can we start getting some separation away from that moving average? If that happens, look out below. That range will probably, right, be the next stop here for tomorrow. The next thing would be if we sit sideways. Now, this could also happen to the S&P. The S&P could also go sideways here tomorrow. If we end up sitting sideways here, what that will do is it'll put a big stamp of approval right on that trading range. So if we start going sideways here for a while, right, that range, remember, ranges act like magnets. And so if we start going sideways into the overnight session, right, into the Asian London session, that range now becomes a magnet. What do we do in a range environment? We find levels of support below the range, and we combine those support levels with those two try failure patterns, right? Kind of the basic idea there is to wait for the price to get down to support levels below the range, wait for the bears to try to get short and take this thing back down again, and we can simply buy into those stop losses, using those stops as fuel to power this thing back up to retest those highs. And then obviously, right, we get a couple options going higher here. Now, we may see this market take out this high, right? They may simply go up, retake out that high, and we get one of those beautiful nesteds, those one, those two, right? Those nested failures we talk about. Love these nested. So I am not afraid. I am definitely not afraid here of shorting off this high, right? But I have to wait for the right entry pattern. So again, we go up, we take out those highs. The buyers come back. They try once. They try twice. We're selling off a trend line. We're selling a trap high up there, right? Whatever we get, right? That trend line, a trap above that high will work even better, right? We're shorting that second try failure. Then from there, we can sell into stops, right? We're selling off the highs. We're selling into stop losses of those buyers, and we're hitting again on that, what is basically a 1, 2, 3 reversal into a hidden channel pullback. Right? Remember, we're not just simply selling at that pullback, right? We're looking for bull traps, buyer failures, into strength moves, into pullback combinations. I cover all the specific entry trigger details inside that video class that pops up there in the upper right-hand corner, right? So grab that link and make sure you get registered. How do we trade the breakout? Breakout's pretty simple. We've got our next top up here, 1320, 13287, right? 13280 up there, just shy of 1330. What do we need for a breakout? There are two types of breakout patterns I'm keeping an eye out for tomorrow. One is that one, strong move up. Two, pull back to the moving average. Three, jump off the moving average. We call these 1, 2, 3 breakouts. 1, 2, 3 breakouts. Mark that high. Right, find that new channel off the high, draw it down to that low, and first test is always the best test, right? First test is always the best test. I'm looking for a seller failure pattern. I'm looking for a bear trap. I'm looking for a pullback combination into a strength move going higher here for these specific entry triggers. Or if the market really blasts higher, right, on strength here, strong move up, shallow pullback, higher high in price, traps, baby. Right? Strong move up, shallow pullback, right? Strong move up, shallow pullback, higher high in price, trap low, and again, extra bonus points, right? Combine that high, find that low, and buy it off the low of that hidden channel. Target at the overhead is easily at that 13,280 range, right? Because some big tops up there from prior price action. So now we know how to trade the breakout. We know how to trade the range. We know even if we do run up and come back, right, I can still short that sucker as long as I have the right pattern set up. The hardest part for tomorrow is going to be if this market grinds lower. If it grinds lower, that range will still act as a magnet. That'll be the sign of one try, two try, and whoop, right back up. If they grind lower, but then they start to accelerate, yep, that's your sign now. That's your reversal. Mark that low, mark that high, get that pop, and collapse back down in. And again, we'll go over more of these details tomorrow morning in the trade room. I'm just simply going over the basic strategy here for tomorrow's trading session. Nasdaq looking good. Nasdaq might have that next run higher here. We'll see. We will see. How about some gold? So Gold's one of the harder ones to look at here tonight, not because there's, well, I guess because there's not a lot on this chart, right? There's not a lot on the gold chart. You'll notice, of course, we had that range from yesterday, and pretty much they spent a good amount of time in that range right here today. If the sellers get what they want, the sellers want to come back down into that trading range. Okay, if the buyers get what they want, they'll go up into that, that range way up top here, right? Remember that juicy, right? That monster range up there? Yeah, there's a big magnet. Get your weekend gap from last Friday, get the range magnet. So that 1735 area, that's where these buyers would love to go. Pretty straightforward, pretty cut and dry. Whenever I see a day like this, where the market pretty much, again, it chopped around a little bit there and pretty much went straight line up, you'll notice 1, 2, 3, 4. Now, if you watch my newsletter a lot, or if you join me every morning in the trade room, when we go 4 legs up, we're usually not going much further. All right. Now, there's always exceptions to every rule. Even a broken clock is right twice a day, right? So there's always exceptions to this. And of course, with a $2 trillion, $3 trillion, $4 trillion infrastructure plan they talk about today, I could easily see, right, how this gold market, right? I could easily see how the gold market may pop higher here into tomorrow. But right now, though, it's definitely difficult to want to buy this thing at this point. So we're 4 legs up. There's 2 things, right, I'm looking for here as we go into tomorrow's trading session. The big one is do we have a trading range, right? Does this market go sideways? Like the Nasdaq, if it does go sideways here, that will basically put a stamp of approval at this price and create that as a magnet. If we get a range, the job is pretty simple at that point, right? We mark up support levels below the range. We look for that pullback underneath it. We wait for those bears to come in, try to get short, right? And we buy into those stop losses. So again, a failure setup if we see this market, again, go sideways here. The more difficult part will be if we get the pullback. Now, again, as I mentioned earlier, I think the easier money here is on the short side with this, right, with this range acting as a magnet. What will be very important, though, is to get that move lower, hold the pullback, and start getting some separation as we go lower. If that happens, I'm going to grab that prior swing, that low, that high, and start looking for that short off the top of that channel. Okay, this will effectively be buyers try once, buyers try twice, and I'm looking for that short off those highs. So imagine now we go 1, 2, go. We mark up that, again, that kind of wider channel there off that high. We pull back above the moving average. Buyers get in above the EMA. Again, you can kind of think of how this might be a 50% pullback area, right? Buyers logically will want to buy that next, right, that deep pullback. Let them get long into it. Let them buy into that pullback and short right into those stop losses. And again, that pullback combination as we come back over, right? Buyer failure into pullback combination, maybe a strength move right as we go. The other scenario, like I mentioned earlier, is going to be if they grind it lower, right? If they grind it lower, that's going to be the big key. That'll be the hard part for tomorrow. If they grind it lower, that's your sign now that the bears haven't quite gotten the edge that we need them to. At that point now, it's bears try once, it's bears try twice. All their stops now are sitting right above that high, and we can buy again off that trend line, buying the stop losses, right, for that run back up to retest the high. I would also not be afraid either if the market did pull back, go back up, retest these highs, and then we use a nested failure. Buyers try once, buyers try twice, draw that trend line, grab that trap high, and short off that trap, right? Remember, trap high, or again, we call these nested failures. The trap, of course, is just a cherry on top. Right? If I can get that trap high, that's even better. If not, I can grab it shorting off the trend line or short into those stop losses. And again, mark that new channel off that low, mark off that high, and be ready for those buyer failures, those bull traps, right, as we pull back off that channel. Okay, that's the kind of the meat and potatoes there of the gold. Again, most of the time when the market goes 4 legs up, it's a range. So be ready for the range tomorrow. Wait for that range going sideways. Buy that low below that low, or buy the failure below that low, or get that start to separation off the moving average. Mark those lows, mark those highs, right, and short it. Either that or it's going to be that grinder, right? That grinder. When it grinds like that, that's when you know we haven't quite turned for the bears yet. Let those bears try once, let them try twice, and we could buy right where it hurts. Now, of course, how do we buy it as it's going higher? Where does this market want to go? The market wants to go up to that range magnet 1735, right? 1735 and change up there. So do not be, I wouldn't be afraid at all if this market runs up, strong move up. Let's adjust this a little bit wider here. There we go, right? So strong move up. Now, I'm not going to buy that first pullback because where we are right now, but if they can hold that pullback and go, that creates that 1, 2, 3 breakout pattern into a hidden channel pullback. Again, grab that free trading class link I mentioned in the upper right-hand corner there for all the details of all these specific entry triggers I'll use to buy that pullback. Or we may see it simply rip higher here. Again, it wouldn't be far-fetched to think this market goes higher here tomorrow. It's just right now being 4 legs up. It's very difficult to buy it right now. If we do see that strong run higher here, though, get rid of this channel here for a moment. If it does make that strong run higher, if it blasts higher, this could easily come right back down again, right? And again, I wouldn't be afraid of seeing a blast higher, see it 1, see it 2, trap high, and short it right back down into this area here, right? That would not be a bad idea at all, as long as you get that good setup. What I want to see, though, is I want to see that strong run higher, that shallow pullback, and that higher high. The higher high is what confirms it's not going to be a crown reversal or a nested failure going back down in. Strong move up creates momentum. Shallow pullback creates urgency. Higher high in price basically confirms the move here, right? Confirms we're not just going to go 1, 2 and right back down again. At that point now, mark that low, right? And that's going to be your trap entry from there. As always, mark those highs, mark those lows. Extra kudos for you for combining that entry pattern with the low of that channel. So do we break higher? Look for those 1, 2, 3 breakouts. Look for those 2 try breakouts, right, as it is described. If we run higher, keep your eyes on that pop and drop back down again. The hardest part again, the easy part's the range. The hardest part's going to be tomorrow if it grinds down into our battle zone. At that point, again, the bears do not have control yet. So once we see it start to pop, right, bears try once, bears try twice. That will be a good spot, right, to try to get long here, going back up to retest those highs. The moment they get some separation, though, right? The moment they get some separation, think about it. If let's say we grind lower and then we separate from there, right? So we grind lower, then we see some separation from there. What I'll do in that situation is, again, find that channel, wait to get above the moving average, get those buyers roped in with a failure pattern, and sell right into those stop losses, right? If it really starts to go, if it just goes 1, 2, 3 and runs, right? If it really runs, if momentum is strong enough as it goes lower, just simply mark that low, mark that high, and again, looking for bull traps, right? Looking for buyer failures. It'll be that failure into pullback, into strength combination as we go into the high of that channel, right? If you imagine zooming in closer on that high. All right, so range, magnet, big, juicy magnet for the short side here. 4 legs up, a range or reversal for tomorrow. Will they keep it going? That is the question. And now we have a great plan to capitalize on whatever we get tomorrow morning in our trade room. Now, speaking of tomorrow morning's trade room, I would love to see you there, right there with us. The plan is ready. All I need now is to see you tomorrow morning, 8 o'clock Eastern Time. Getting registered as a new member is easy. I'll put all the membership links you guys need either below this video on the blog at Sideways Markets, or I'll put it in the description of this YouTube video. Grab that link in the description, get registered. That way you don't miss tomorrow's April 1st trading session. Don't be afraid to call me. I'm always here if you guys have questions. I got live chat on the left, live support on the right, so don't be a stranger. I'm always here to help you out wherever you are on your trading journey. And again, I hope by now you subscribe to our YouTube channel. If you have any questions, drop them in the comment section below. And hope by now, thumbs up here if you guys enjoyed this video. But enough of the video tonight. Thank you so much for tuning in tonight, guys. Have a great rest of your day out there. If I don't see you tomorrow morning in the trade room, have a fantastic Easter weekend. A very happy Easter to everybody who is celebrating. And we'll see you guys again. If not tomorrow morning, we'll see you guys back here to our normal schedule next week, for the first week of April. That's it for me, guys. As always, be well out there. Be nice to each other, will you? Stay safe this holiday weekend, and be here next time. Adios, amigos. Bye-bye for now.